Welcome back to Investing Talk podcast. Today, we are looking into a company that's navigating, well, a really dramatic strategic shift, American Resources Corp. And the big question we're trying to unpack for you is this. Is American Resources Corp a good time to buy right now? I mean, this is a company trying a huge pivot, really moving away from its legacy in coal extraction and jumping headfirst into the highly strategic, high-growth world of rare earth elements and critical minerals. They're doing this mainly through their subsidiary, Re-Element Technologies. Now, before we really get into the analysis, just a quick reminder, please do subscribe, like, and comment on this discussion. We appreciate the feedback. And hey, if there's a specific company you'd like us to examine next time, just drop that ticker symbol in the comments below. We genuinely love getting your requests.
Okay, let's dive into the source material here. And you said it, this is pretty much the definition of a high-risk, high-reward situation. We really need to look past the current fundamentals, which frankly look weak, maybe even alarming in some ways. Our job here is to rigorously analyze the potential of this strategic transition they're attempting into domestic critical minerals.
Okay, let's start there then. Unpacking the starting point. If you just look at the raw financial numbers right now, the foundation of their current business, well, the picture isn't just modest, it looks kind of precarious, doesn't it?
Yeah, precarious is a good word, maybe even putting it mildly. For a company with this kind of market presence, the revenues are extremely thin. We're talking just $330,304 over the trailing 12 months, the TTM.
Wow.
Yeah. And that really tells you the legacy coal business is either shrinking fast or perhaps more likely being deliberately wound down.
Right, because if you saw those kinds of numbers, that revenue and the losses will get to attached to almost any other company, you'd probably just close the book right there, wouldn't you? So why specifically does this pivot, this strategic pivot, warrant kind of ignoring such a substantial loss?
Well, the losses are significant. You're right to focus on that. TTM net income is negative $37.43 million. And the earnings per share, that's negative $0.47.
Oh.
Exactly. But here's the thing. This isn't really a surprise in this context. It's almost the expected cost of doing this kind of massive retooling. They are essentially intentionally burning cash to shift from, low-margin, high-liability coal mining to what they hope will be high-margin, value-added refining of critical minerals. The market isn't pricing the past here. It's pricing the promise of Re-Element Technologies.
Okay, but promise requires fuel, right? And the sources are flagging liquidity as a major, like an immediate risk. How tight is their balance sheet right now, especially given they're running lean on cash and taking these heavy losses for the transition?
Yeah, liquidity is definitely a key point. The current ratio is described in the sources as notably low.
Which is academic speak for.
Extremely tight.
Yeah.
Yeah. This is a critical area of risk for you, the listener, to keep a close eye on. It means they are heavily, heavily dependent on execution. They can't really afford significant delays or setbacks. They need those partnership deals to flow. They need future capital events, maybe equity raises, maybe more equipment financing. Like they just got to fund this big infrastructure build out.
Right.
They are not cash flow positive currently. And that makes any execution failure potentially an existential threat.
And let's not forget, this company just regained Nasdaq compliance back in July 2025. I mean, that means they were recently right on the edge of being delisted. Doesn't that recent history, that fragility, make even the strongest contract wins feel a little bit shaky?
It absolutely introduces that historical fragility, you're right, which is precisely why regaining compliance was so critical for them. It basically bought them the time and, maybe more importantly, the credibility they desperately needed to keep this transition going. The market seems to be looking past that sort of near-death experience now, but it definitely underlines that this is a company in rapid, high-stakes motion.
Yeah.
This isn't some stable, diversified blue-chip investment.
Okay, so given that tight liquidity and the recent near miss with delisting, it seems clear they need massive external validation to keep investors interested, to keep that momentum going. What's the next big confirmation point for us? The thing that tells us the market still believes this pivot is worth the execution risk.
The immediate big one is the upcoming Q3 earnings report. That's scheduled for November 13th, 2025.
Okay, mark the calendars.
Exactly. That's the key moment. It's where the market will be looking for hard evidence, for confirmation that the high cost, the cash burn we talked about, are finally starting to generate some measurable revenue acceleration, even if it's starting from that very low $300,000 base. They need to show growth off that base.
All right, so let's shift gears a bit, because despite those shaky financials we just laid out, this is where it gets really interesting, isn't it? American Resources Corp is actively trying to build a competitive advantage a moat, if you will, around domestic high-purity rare earth supply. And this is being framed, almost treated, as a U.S. national strategic asset.
That's absolutely the core of the bull case. That's the key structural difference here. They aren't just, digging stuff out of the ground anymore. They're positioning themselves as a crucial domestic processor and refiner. And their subsidiary, ReElement Technologies, that's the engine driving the innovation here.
Okay, let's talk specifics on that innovation then. What is the actual breakthrough? What's the tech that justifies this, potentially massive valuation shift people are betting on?
It seems to be validated tech, which is important. ReElement announced a major breakthrough. The first large-scale production of over 99.9% pure germanium. And critically, this was from recycled sources.
Okay, 99.9% purity. Why is that specific number so important?
That purity level, that 99.9% is the essential takeaway. It's crucial because it meets the incredibly stringent specifications needed for things like sensitive optics, advanced semiconductors, and importantly, military applications.
Ah, okay. High-spec stuff.
Exactly. That level of refinement is something very few domestic players can currently achieve at scale. So it makes their process potentially extremely valuable, especially in the context of securing U.S. supply chains, reducing reliance on foreign sources.
And that kind of purity presumably unlocks higher margin applications too. And you're saying this isn't just theoretical, right? They've actually locked in partnerships that start to shift them away from that old coal revenue.
Yes, the deals are the proof points you look for. They secured a significant long-term supply contract with a company called Vulcan Elements. They're going to provide high-purity rare earth oxides to Vulcan.
And why is Vulcan Elements significant in this context?
Because that material is specifically earmarked for domestic magnet production.
Ah, okay. The magnets are key.
Key for defense systems, key for electric vehicle motors, wind turbines. This directly addresses that big U.S. strategic vulnerability, the reliance on foreign sources, mainly China, for these essential components.
And it's not just traditional refining, is it? They seem to be taking a pretty aggressive stance on diversifying where they get their raw materials from, which takes us into that, well, geopolitically charged area of seabed minerals.
Correct. They've established some potentially differentiating partnerships focused on seabed exploration, specifically with the Cook Islands and also the American Samoa Economic Development Authority.
Interesting. Why go to the seabed?
Well, from a strategic viewpoint, this is all about trying to secure future, potentially very large, stable supply streams that are outside of currently dominant or politically volatile regions. It positions them as a potential critical player if and when the U.S. really accelerates its mineral independence efforts, including looking at these less conventional sources.
And we definitely can't just gloss over the government backing here. It's easy to see DoD contract and move on, but the implications for, pricing power, regulatory certainty, long-term stability, those seem huge.
Absolutely huge. Securing that U.S. Department of Defense contract award, specifically aimed at boosting domestic rare earth refining, is a stamp of approval you just can't overstate. It really reinforces their potential role as a designated strategic supplier to the U.S. defense industrial base and the broader tech sector. This isn't just another mining company. It's potentially becoming a piece of developing national infrastructure.
Okay, but that level of ambition, that kind of expansion, needs serious capital. We just talked about how tight their liquidity was. How did they manage to fund this aggressive growth plan?
Yeah, and that's another crucial piece of validation, this time from capital providers. It shows they believe in the growth story, too. Just recently, in September 2025, ReElement secured a $20 million equipment leasing facility.
$20 million. Okay.
And that capital is specifically earmarked to support the expansion of rare earth oxide production and also lithium carbonate production at their sites in Indiana. The sheer size of that facility, $20 million, confirms the scale they're planning is large, and it suggests the transition is, at least for now, funded through this key build-out phase.
All right, let's pivot now. We've talked fundamentals, strategy. Let's look at how the market is actually trading the stock. Based on all that positive news flow we just covered, the DoD contract, the Vulcan deal, the financing, the momentum looks pretty strong on the chart. What's the price action telling us?
Well, the price action is definitely mirroring that strategic narrative almost precisely. The stock has seen a really dramatic surge recently. It moved from around $1.45 back in August 2025.
Wow, big move.
Yeah, up to trading over $3.70 in early October 2025. That kind of move is significant. It establishes a very clear bullish reversal pattern on the chart, and it confirms that, yes, investors are reacting strongly to the future promise, not the current profit and loss statement.
And the moving averages, do they back that up? Do they suggest this acceleration has real technical force behind it, not just a, temporary news spike?
They do, precisely. The stock is trading substantially above both its key moving averages. The 50-day simple moving average, the SMA, that's around $1.98. And the longer-term 200-day SMA is way down at $1.09.
Big separation.
Huge separation. And when you see that kind of gap, with the shorter-term average well above the longer-term one, it's a classic technical confirmation of strong upward trend acceleration. It's a key bullish signal for technical traders.
Okay, but what about the risk of it overheating? We've seen plenty of fast movers, especially after a big news spike, burn out pretty quickly. Is it looking overbought?
That's always a valid concern. But if we look at a common indicator for that, the Relative Strength Index, or RSI, it currently sits around 59.71.
And what does that number mean in practical terms?
Well, it's definitely in bullish territory. It shows strong buying pressure. But critically, it's not yet in what traders traditionally consider overbought territory, which is usually pegged above 70.
I see.
So this suggests that purely from a technical analysis perspective, there might still be room for continued upside potential before you'd expect a significant pullback or stall just based on momentum exhaustion.
Okay, so for listeners who are watching the day-to-day volatility, maybe trading this more actively, where are the key support and resistance levels they should be keeping an eye on right now?
Based on recent action, near-term support seems to have formed around the $3.07 to $3.10 zone. That level might act as a floor if the momentum pauses temporarily. On the upside, that recent peak, around $3.07, is currently acting as the major resistance level to watch. Breaking convincingly above that could signal another leg higher.
And what are the analysts saying? Does the consensus view line up with this bullish technical picture?
It does seem to. The analyst consensus is currently rated as a strong buy, and their average price target is sitting at $4.67.
$4.67. Okay, so that suggests, what, over 26% potential upside from where it's trading right now?
Exactly. So analysts are clearly factoring in successful execution of this strategy into their valuation models.
All right, so the next few months look absolutely loaded with potential catalysts, potential volatility drivers based on scheduled events. What's the essential timeline? What are the key dates or events our listener really needs to follow closely?
Okay, number one, absolutely critical. Mark your calendar for November 13th, 2025. That's the Q3 earnings report.
The big test.
The big test. It's really the first major opportunity for management to publicly validate, with numbers, that these new contracts and facilities are actually translating into meaningful revenue acceleration. Also, potentially happening imminently, is the official large-scale commercial launch of that specialized, recycled, high-purity germanium production we talked about. News on that could be a near-term mover.
And looking a bit further out.
Looking ahead to December 2025, investors should definitely watch for any guidance they issue on Q4 operations, and especially the preliminary 2026 outlook. That's going to provide the forward-looking roadmap, give more clarity on the strategic timeline and financial projections.
And longer term.
Longer term, the thesis is that they are really well positioned to benefit hugely from these big secular macro trends. Things like sustained U.S. federal support for building out critical minerals infrastructure, the whole energy transition. That's the multi-year tailwind they're hoping to ride.
Okay, so let's try and tie all these threads together. We've got the low current revenue, the high purity tech breakthrough, the DoD backing, strong technical momentum. If you connect all these factors, what's the summarized investment thesis that this source material presents? What's the bottom line?
The thesis is overwhelmingly bullish. The source material actually rates it an 8.5 out of 10.
Pretty high conviction then.
Very high. And the core rationale, the reason for that rating, is essentially that the high near-term execution risk, which is very real, is seen as being heavily outweighed by the significant, potentially transformative long-term reward. That reward is tied directly to the success of this structural pivot toward critical minerals. For this stock, it seems the promise of long-term reinvention is trumping the short-term losses right now.
But let's hammer home that risk point again. Because this high-stakes environment, it absolutely means risk is inherent here. You mentioned the high volatility, a beta of 1.15 suggests it moves more than the market, and that perpetually tight liquidity. This is strictly a high-stakes, execution-dependent kind of play, isn't it? It's not for the faint of heart.
It absolutely is. Let's be very clear about that. The primary risk, the thing that could derail this whole story, remains execution failure. If real element stumbles, if they fail to scale up production efficiently, if costs run higher than expected, Or if some of these more speculative ventures like the deep sea mining face major regulatory hurdles or environmental delays, then that low current ratio, that tight liquidity we discussed, could very quickly turn into a devastating cash crunch. That's the downside scenario.
But the upside?
But the upside, if they execute successfully, is potentially transformative for the company's valuation. And that's what makes American Resources Corp interesting right now. It seems attractive potentially for both short-term traders who are betting on positive news flow around these catalysts, and also for long-term investors who are focused on that big secular growth story in rare earths and critical minerals, and who are willing to tolerate the volatility along the way.
Okay, so wrapping this up, what does this all mean for you, the listener, as you're tracking this stock, maybe considering an investment? Well, the sources mentioned something else, persistent market chatter, speculation really, about a possible spin-off of the highly valuable ReElement Technologies subsidiary.
Ah, yes, the spin-off angle.
Yeah.
That is often talked about as the ultimate value-unlocking catalyst here. If they were to somehow formalize a spin-off, maybe using a SPAC, a special purpose acquisition company, to quickly take ReElement public on its own.
Right, separate it out.
Exactly. It would instantly separate the high-growth, high-potential refining arm from the legacy coal business, which is likely still dragging down the overall valuation. It could crystallize the value of ReElement almost overnight for existing shareholders.
So here's a final thought for you to consider. If a formal announcement comes through, maybe a major new joint venture, maybe a huge federal grant expansion gets confirmed, how quickly could something like that shift the entire valuation landscape for American Resources Corp? Especially considering the stock's already showing strong technical momentum, trading well above those key moving averages. Definitely something for you to mull over as you keep a close watch on those critical November earnings.